Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about a simple trading strategy that I used this past week to make over $1,300 in a single day. So I hope you guys all enjoy it. If you do, smash that like button, subscribe. And if you guys are watching and you're like, who is this random guy? My name is Carter. I am a full-time trader in the stock market, and I have been for over the past 7 years. So, guys, if you want to learn more about trading, check out our school. It's called the Swing Trading Masterclass, where we have private live streams, quizzes, lectures. But more importantly, we actually teach you how to find stocks. We teach you how to build your strategy. And it's not a get-rich-quick scheme. It's not alerts or anything like that. So click that link, sign up, learn to trade, and I'll guide you through the way. So I hope you guys enjoy it, and let's jump into this here. So this past week here, we had one of our best day trading sessions that I've ever experienced. Now, over the past couple of weeks as well, we've really taken a step back from swing trading where we're holding positions overnight and we're focusing more on day trading, so getting in and out of trades. Now, when you trade stocks, there's two ways you guys can make money. You can buy a stock and you try to sell it at a higher price, or you can short a stock where you borrow shares in hopes to buy them back at a lower price. So over the past week, we've taken a variety of very, very fantastic short trades and long trades, but this past trade here was a short trade. So we bet for the market to fall down. So let's go ahead and show you the trade that we took. Now, before we ever want to find a stock to trade or anything like that, you need to have a trading broker. The broker I would recommend is Moomoo, because they offer direct access to the exchange. They offer fraction shares, and honestly, they're just the broker that I've used over the past 7 years. So check them out down below and you guys can get up to 30 free stocks. But more importantly, with our trading strategy, you never just look at one indicator, one time frame. You want to look at a variety of different time frames. So for me, the first time frame I start at is the hourly time frame. Now, the reason why I start there is because the hourly will give us the past about 20-ish days to determine general support, general resistance. So you guys can see the heavy amount of support down in this zone where it hits it several times and it just establishes good buying pressure. Now we also have a good amount of resistance up in this zone where it hits it. We have natural tendencies of getting selling pressure. So obviously, looking at this chart, you'd want to buy down here and sell up here. So that's just getting a general broad explanation of support and resistance and a general time frame. The next thing I do is I want to go ahead and look at a lower time frame like the 5-minute chart. Now, looking at the 5-minute chart is a really important idea when it comes with trading, because this will help you find a little bit heavier supports than the 1-minute and harder confirmations. So you guys can see where Tesla stock rallied up very fast in a short amount of time. Now, for me, I really couldn't get in on a long position with this trade. We were thinking about doing a trend line trade or something along those lines, but by the time we got in, I felt like I was chasing the stock and I was possibly waiting for a little pullback. But by the time the stock rallied up, it literally rallied up over, let's go ahead and draw this out, over 5% in about 30 minutes, which is millions, if not billions of dollars in market cap getting added to Tesla stock for no reason whatsoever. So we know often what goes up often goes back down. One of the main indicators we looked at here was this MACD crossover, which is a super important indicator. And you guys can see here that it dipped down and we had this signal line break down through that MACD line, which represents a short potential, meaning we're betting for the stock to sell off. Now, you guys can see that that followed by really good selling pressure, and it also had an overvalued RSI, which was trading for a 90, which is very high. Historically, anything over a 70 is an overvalued point and could see selling pressure. So now we even want to go to a lower time frame to help find those confirmations. So at the time here, one of the things that I saw here was this. This is kind of the layout that I was looking at. I saw this rally up consolidate here and rally up. I really couldn't get in on a good breakout. We were looking at a breakout like this or some sort of short potential, but it really never broke through any of the trends. It was just rallying its way up. And yeah, this would have been a good pullback for a long position. But given that the stock was already up right here, 4.5%, I didn't want to get in on a position because I thought, how much higher could it realistically go? Now, it really rallied up and it formed this general upward trend right here. So now here, you guys can see that first red candle to break down below that trend line was our entry near and around the 305 area. So my thought process was this here, entering on that breakdown, keeping our stop above highs for a push back down to that 200-day moving average line, gave about a 3.2 risk versus reward. So risking about $1 to make over $3. And you guys can see that it rallied its way down, forming this really nice trend line here, as you guys can see. Just like that. So now as the stock continued to sell off, we moved our stop loss or our profit lower and lower and lower. And we actually covered our position at that 90-day moving average line near and around that 299 mark. The reason why we covered there instead of waiting for this is because it had two confirmations of support here. So you guys can see it hit it, support, and then it hit it again. So now I actually thought we were going to get a bunch of buying pressure back up to possibly the highs again. And you guys can see it broke out, but it overall ended up selling off. And if we would have held the trade, we probably would have made over about $1,600. But that's the thing about trading. You'll never be able to buy at the peak bottom and sell at the peak top. It's all about using good risk management and confirmation. And guys, here's the thing about trading. I've never lost money taking profit. And that is super, super important. Everybody loves to complain and they go, Carter, I've only made 1%. Hey, but you're profitable. That's better than like 90% of traders. So if you're up on your money and you're getting shaken out of a trade or just feeling like the trade could go south, guess what? Cover profit. And I think that's what's incredibly important in traders nowadays is they don't do that. So I hope you guys all enjoyed today's video. If you have any questions, feel free to ask down below. Make sure you guys like, follow, and I hope you guys have a great rest of your day and take care.